What if I told you that one of the most successful investors ever, Stanley Druckenmiller, the man with 30% annual returns for over 3 decades, just made huge bets on artificial intelligence? This isn't about hype, it's about following the smart money into the next technological revolution. Today we're breaking down Druckenmiller's exact moves, stock by stock, on the 3 AI giants he's betting on. We'll look at a cloud and e-commerce pioneer, a social media powerhouse redefining connection with AI, and a search titan at the forefront of AI research. These aren't random picks, they're strategic moves from a master investor, and understanding his logic could change your investment strategy. We'll dissect each company, look at the numbers, and reveal the thesis behind these billion-dollar bets. Let's dive in. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. First up, Amazon, ticker AMZN. When you think of Amazon, you probably picture the world's largest online store, delivering everything from books to groceries to your doorstep. But beneath the surface, Amazon is quietly transforming itself into the backbone of the digital economy, with artificial intelligence at the heart of its strategy. The e-commerce and cloud leader is now making massive moves in AI. Amazon isn't just using AI to improve its own operations, it's building the infrastructure that powers the next generation of intelligent applications for businesses around the globe. The real story is Amazon Web Services, or AWS. While most people know Amazon for its retail dominance, AWS is the company's crown jewel, a platform that quietly runs much of the internet and is the engine behind Amazon's explosive growth. It's the backbone of the internet and the go-to platform for building and deploying AI applications. From streaming services to financial institutions, AWS provides the computing power, storage, and advanced AI tools that make modern digital life possible. Every time a startup launches an AI app or a corporation analyzes data, chances are, it's running on AWS. The platform's flexibility, reliability, and global reach have made it the default choice for innovators and industry giants alike. Amazon is selling the picks and shovels for the AI gold rush. Instead of betting on a single AI application, Amazon profits from every company building the future, because they're all using its infrastructure. AWS is a high-margin, fast-growing business with a deep moat. Once a company builds on AWS, switching is tough, meaning predictable, recurring revenue for years. This stickiness gives Amazon a powerful advantage, locking in customers and creating a steady stream of cash flow. But Amazon's AI push goes further. AI powers its recommendation engine, optimizes logistics, and drives efficiency in every corner of its business. From the moment you search for a product to the second it arrives at your door, AI is working behind the scenes to make the experience seamless and personalized. Those customers who bought this also bought suggestions? That's AI. Amazon's algorithms analyze billions of data points to predict what you'll want next, boosting sales and keeping customers coming back for more. Packages arriving on time, AI-powered logistics, machine learning models optimize delivery routes, predict demand, and even anticipate weather disruptions, ensuring Amazon's legendary speed and reliability. Amazon is also developing its own AI chips, Trainium and Inferentia, reducing reliance on outside chip makers and making AWS even more attractive. By designing custom hardware, Amazon can offer faster, more efficient AI processing at lower costs, giving it a unique edge over competitors. This vertical integration creates a virtuous cycle: better performance, more users, more data, more revenue, and more R&D. The more customers use AWS and Amazon's AI tools, the smarter and more powerful the platform becomes, fueling further innovation. Amazon's investment in AI isn't just about technology, it's about building an ecosystem. Developers, startups, and enterprises are all drawn to AWS because it offers the tools, scale, and support needed to turn bold ideas into reality. This network effect makes it even harder for competitors to catch up. Druckenmiller sees Amazon as the enabler of the AI boom, not just a participant. E-commerce, AWS, and a fast-growing ad business, each is a massive growth engine. Together they create a diversified powerhouse that's positioned to benefit from every wave of technological change. The ad business, powered by Amazon's data, is a high-margin goldmine growing faster than Google or Meta's. With its deep insights into consumer behavior, Amazon can target ads with unmatched precision, turning its shopping platform into a marketing juggernaut. And let's not forget Amazon's growing presence in entertainment and smart devices. Prime Video, Alexa, and Fire TV are all powered by AI, creating new revenue streams and deepening customer loyalty. Each of these platforms feeds data back into Amazon's ecosystem, making its AI smarter and its business stronger. Amazon's scale, AI integration, and diversified growth make it a powerhouse, positioned to benefit from AI on multiple fronts. Few companies can match its reach, resources, or relentless drive to innovate. Druckenmiller isn't chasing the next quarter, he's looking at the next decade. The investments Amazon is making in AI today will pay off for years. This is a company that thinks long-term, reinvesting profits to stay ahead of the curve and build lasting value. As AWS grows and AI adoption accelerates, Amazon's profitability is set to soar. The company's ability to scale its infrastructure and monetize new technologies gives it a unique runway for growth. The total addressable market for cloud and AI is in the trillions, and Amazon is the clear leader. Its global footprint, unmatched resources, and relentless innovation make it the company to beat in the digital age. With Andy Jassy at the helm, Amazon is focused on efficiency and free cash flow, music to institutional investors' ears. Jassy's leadership is driving a renewed focus on profitability, operational discipline, and strategic investment in high-growth areas. Amazon comes in with a market capitalization of $3.63 trillion, earnings per share of $10.13, a price-to-earnings ratio of 29.58, revenue of $350 billion in 2024, and net income of $100.11 billion. Those figures paint the picture of a giant that still generates enormous top-line sales and profits while trading at a multiple that reflects both its growth runway and the maturity of its core businesses. For investors, that means Amazon offers scale, diversified revenue streams, and room for AI-driven efficiency gains across retail, advertising, and cloud, but it also means you are paying for a lot of that stability. The company is cutting costs, doubling down on its best bets, and prioritizing shareholder returns. Automation, streamlined logistics, and smarter use of data are all part of Amazon's plan to boost margins and deliver value. For Druckenmiller, Amazon is a core holding, a bet on the foundational layer of the AI economy, with multiple growth drivers and a management team focused on profitability. It's not just about e-commerce or cloud, it's about owning the infrastructure of the future. As the world gets more digital and intelligent, Amazon will be at the center, powering the revolution. Its influence will only grow as AI becomes more deeply embedded in every aspect of our lives. That's why it's a major position in his fund. For investors looking to ride the AI wave, Amazon isn't just a retailer, it's the engine driving the future of technology. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Next up, Meta Platforms, ticker symbol Meta. Once known simply as Facebook, Meta has evolved into a tech powerhouse that's reshaping the digital landscape. The company behind Facebook, Instagram, and WhatsApp is reinventing itself around artificial intelligence, weaving AI into the very fabric of how billions connect, share, and discover online. Legendary investor Stanley Druckenmiller's interest. It's Meta's bold, AI-driven transformation, one that's turning the company from a social media giant into a next-generation technology leader. Meta's recommendation engine is now powered by some of the world's most advanced AI. Instead of just showing you posts from friends, it curates content you'll love from across the globe, learning your tastes, predicting your interests, and keeping you engaged like never before. This shift has supercharged engagement. People are spending more time on Meta's platforms, interacting with more content, and coming back more often. More time on platform means more ad impressions, which translates directly into higher ad revenue, a powerful feedback loop that keeps accelerating. With billions of users worldwide, Meta possesses an unmatched dataset, one that's constantly growing and evolving. This data is the fuel for its AI, creating a competitive moat that's nearly impossible for rivals to cross. Every interaction, every like, every message helps Meta's AI get smarter. AI also powers Meta's advertising platform. Tools like Advantage Plus let advertisers simply upload their creative assets and set their goals. Meta's AI takes over, optimizing campaigns in real time for the best possible results, often outperforming what human marketers could achieve alone. This makes Meta indispensable to millions of businesses, from global brands to local shops. For many, Meta is the primary way to reach customers, drive sales, and grow. The result? A durable, high-margin business that can weather economic downturns and keep thriving. Mark Zuckerberg's Year of Efficiency, a period focused on cutting costs, streamlining operations, and boosting profitability, signaled a disciplined, shareholder-friendly approach. It's exactly the kind of leadership Druckenmiller looks for in a long-term investment. The result? Expanding profit margins, massive free cash flow, and aggressive share buybacks that boost earnings per share. Meta is returning billions to shareholders while still investing in the future. And then there's the metaverse, a bold, long-term bet. While still early, it's a call option funded by Meta's cash-rich core business. If the metaverse vision takes off, Meta could dominate an entirely new digital frontier. Meta's open-source Llama AI model is a strategic masterstroke. By making its AI tools available to developers worldwide, Meta accelerates innovation, attracts top talent, and builds a global ecosystem that multiplies its influence far beyond its own platforms. Druckenmiller sees a company that's navigated regulatory scrutiny, competitive threats, and shifting consumer habits, emerging stronger, rebuilt around AI, and still trading at a valuation that leaves room for upside. You get a dominant cash-rich business with multiple growth levers: AI, advertising, the metaverse, and more. And you're paying a price that doesn't fully reflect the company's long-term potential. The synergy between Meta's massive user base and its AI capabilities creates a flywheel effect that's only just beginning to spin. As the AI gets smarter, engagement grows, and the business becomes even more resilient. New AI-powered products like smart assistants in WhatsApp and Instagram could unlock entirely new revenue streams, from commerce to customer service to digital experiences we haven't even imagined yet. Druckenmiller is buying the stable foundation and getting the massive upside for a bargain. He's betting on Meta's ability to innovate, adapt, and lead in the age of AI. The market was too pessimistic on Meta, missing the company's transformation. Druckenmiller saw the opportunity to buy a world-class business at a discount. Meta Platforms shows a market capitalization of $1.49 trillion, earnings per share of $22.58, a price-to-earnings ratio of 26.32, revenue of $164.5 billion in 2024, and net income of $62.36 billion. Those numbers highlight a remarkably profitable business with strong free cash generation and operating leverage. Meta is monetizing attention at scale and reinvesting aggressively into AI and the metaverse narrative, which is why its valuation reflects both current profitability and future optionality. As Meta continues to execute on AI, drive engagement, and launch new innovations, there's still significant room for the stock to run. The story is far from over. That's why Meta is a cornerstone of Druckenmiller's AI portfolio, a rare blend of stability, growth, and optionality. He's not just buying a social media company. He's buying one of the world's most important AI companies, positioned at the intersection of technology, data, and the future of human connection. Finally, Alphabet, ticker GOOGL. The parent of Google is a true AI, search, and cloud giant, standing at the very heart of the digital revolution. With a legacy of innovation and a relentless drive to push boundaries, Alphabet has become synonymous with the future of technology. Druckenmiller's move signals the market is underestimating Alphabet's AI dominance and future potential. While many investors focus on the latest headlines, he's looking deeper at the company's unmatched scale, data, and engineering talent. Google Search is the ultimate AI product, delivering relevant results in milliseconds, powered by years of data and research. Every query refines its algorithms, making it smarter and more indispensable with each passing day. Now, generative AI like Gemini is making search even smarter, creating new opportunities for premium advertising. This integration means users get more personalized, context-aware answers, while advertisers can target audiences with unprecedented precision. Druckenmiller sees Alphabet leading the evolution of its own core product, not being disrupted. Instead of fearing change, Alphabet is shaping it, constantly reinventing search, ads, and its entire ecosystem to stay ahead. YouTube, the world's second-largest search engine, is another AI-powered juggernaut. It's not just a video platform, it's a global community, a learning hub, and a cultural force, all driven by sophisticated algorithms. Its recommendation engine drives engagement and ad revenue at scale. Billions of hours are watched every day, with AI curating content that keeps users coming back for more. For investors, YouTube is a high-growth, high-margin business with a deep moat. Its creator ecosystem, global reach, and dominance in digital video make it nearly impossible to replicate. Google Cloud, once a distant third, is gaining ground thanks to its AI strengths, offering Gemini models, custom hardware, and Vertex AI tools. Enterprises are increasingly turning to Google for advanced machine learning and data analytics. As enterprise AI adoption accelerates, Google Cloud's growth story is just beginning. Its open ecosystem and innovation in AI infrastructure are attracting new customers and driving revenue growth. Alphabet's other bets, like Waymo and self-driving cars, are high-upside, AI-driven moonshots. These projects may seem speculative, but they represent the next frontier of technology, with the potential to transform entire industries. If even one hits, the payoff could be huge. The optionality embedded in Alphabet's portfolio is a rare asset for any investor. Alphabet's fortress balance sheet means it can invest, acquire, and return capital to shareholders, all without debt. Its financial strength provides resilience in downturns and flexibility to seize new opportunities. Operational discipline under Sundar Pichai is improving margins and driving shareholder value. His leadership has brought focus, efficiency, and a renewed commitment to innovation. Druckenmiller likely saw the market's fear of AI disruption as overblown. While competitors race to catch up, Alphabet's deep expertise and infrastructure give it a lasting edge. Google's expertise, data, and resources make it a long-term winner. Its ability to process and leverage massive datasets is unmatched, fueling breakthroughs in AI and beyond. He's buying a misunderstood leader at a discount, betting on a re-rating as Google proves its resilience. As the company continues to innovate and grow, the market may soon recognize its true value. Alphabet is a comprehensive AI play. Search, YouTube, cloud, hardware, and moonshots, all under one roof. Few companies can match its breadth, depth, and ambition in the AI space. The value of search and YouTube alone justifies the market cap. Cloud and other bets are the upside. This layered business model provides both stability and explosive growth potential. Druckenmiller is focused on durable advantages and long-term growth, not short-term headlines. He's betting on Alphabet's ability to adapt, scale, and lead for decades to come. Alphabet's track record in AI research and innovation is unmatched. From pioneering deep learning to breakthroughs in natural language processing, it sets the pace for the entire industry. Alphabet sits alongside the biggest names in AI with a market capitalization of $3.63 trillion, earnings per share of $10.13, a price-to-earnings ratio of 29.58, revenue of $350.01 billion in 2024, and net income of $100.11 billion. Alphabet's scale and cash flow mirror Amazon in many respects, underlining how dominant advertising, search, and cloud remain as cash engines. At the same time, Alphabet is placing strategic AI bets that could re-accelerate growth and justify that premium if execution continues. This is a high-conviction bet on technology, talent, and cash flow for years to come. Alphabet's investments today are laying the groundwork for tomorrow's breakthroughs. That's why Alphabet is now a key part of Druckenmiller's AI portfolio, a company with the scale, vision, and resources to define the next era of artificial intelligence. There you have it. Druckenmiller's AI playbook, Amazon, Meta, and Alphabet. These aren't just big names, they're the pillars of the AI revolution. Amazon is the infrastructure, Meta is the social layer, and Alphabet is the intelligence engine. If you want to level up your investing, check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community, details below. Now, your turn. Which AI giant, Amazon, Meta, or Alphabet, has the most potential for the next decade? Let me know in the comments, and don't forget to like and subscribe. Thanks for watching. I'll see you in the next one.